Deputy Governor Rogers, it's your position, the bank's position, that the Government of Canada's deficit spending is not inflationary. Is that correct?
What we said at testimony last week is that the budget, our initial look at the most recent federal budget is that we don't expect it to contribute materially to inflation, but that the budget came out between forecasts, and as part of the next forecast, we will incorporate the budget. Okay.
Now, did the governor himself make reference that provincial deficit spending could be harmful to the inflationary outlook and could cause inflation? I read something about that. Could you clarify that, please?
Well, I think what the governor said is something he's said many times before, is that when we do our forecast and when we look at inflation, we take all forms of government spending in. We don't distinguish between one government and another. We take it all in, and we measure its impact on inflation. And so whether there's regardless of the source of the spending, if the spending is outpacing growth.
So let me ask you, what's the bank's view then currently of the amount of debt we're seeing spent at the provincial level, and what impact that's having on inflation?
Well, there's different provincial governments have made different decisions. Again, I would repeat what the governor has said. The economy, if governments are spending at a pace in excess of the growth rate of the economy, that is naturally going to be inflationary no matter what government is making that spending.
Thank you. You and Mr. Scheer were in a discussion about productivity gains. You had your statement on a more productive economy would be beneficial in a, I don't know the terms used, sticky inflation or a less conducive inflation environment. That's basically what you said. Is that in response to?
Yeah, basically I said when we look ahead, somebody asked me earlier about demographic shifts, and I've also talked a little bit today about climate.
I want to talk about productivity.
I'm getting there. Climate effects. There's a number of things going forward that we expect will make it a less benign inflationary environment. It'll be more upward pressure on inflation. Sure. A really good way to buffer the Canadian economy in that environment going forward would be to improve our productivity.
Okay. And you were saying anything that kind of impacts capital flows would have a negative impact and therefore contribute to in inflation possibly. Is that right?
Well, what I said was that one of the things that would boost our productivity is to increased investment, and so creating a climate to encourage investment would be...
So Mr. Scheer didn't go where I thought he would, which is then what's the bank's view of the capital gains tax increase, which of course is the tax which most impacts capital flows in and out of a country, and the capital gains tax inclusion rate, of course, is going to go from 50% to 2/3, and we see all kinds of warnings. What's the bank's view on that?
Thanks for your question, Mr. Chair. We are not tax experts. We do not take a view on any one tax measure. The government has a number of decisions to make to balance their budget, to create the right conditions for the economy.
Okay, look, you're the Bank of Canada. You had a lot to say previously about the impact of climate policy. You're telling me the bank does not have a position on a capital gains tax increase? You have the floor.
I would repeat my previous answer. The Bank of Canada, we are not tax experts.
Okay, then let me just stop you then, because you mentioned something which is really interesting. You said that at the height of the crisis, 2020, 2021, when the government was looking at providing benefits to individuals, you said something like, the bank took the position that we did not think it was worth hitting Canadians with a credit crunch. It sounds like you put aside also monetary policy as well and made a policy decision. Instead of looking at the fundamentals, you made a decision to let interest, to not worry about inflation. So my question, I suppose my last question for you is, does the Bank of Canada have any responsibility for the inflation and affordability crisis that we find ourselves in today, given that you misjudged the inflationary cycle we were in, you waited to raise interest rates, and then when you finally hit them, instead of tapping the brakes, you had to slam them on? What's the bank's role in today's affordability crisis and interest rate environment we're in that is also hurting home ownership?
I think what I said, Mr. Chair, was that in June of 2020, when we were making decision to to take extraordinary monetary policy actions.
Sir, I don't want you to repeat I want you to answer my question about the bank's role in today's affordability crisis. That's what I want you to answer. You've mentioned the Ukraine war. You've mentioned all sorts of other variables. You have not addressed the bank's role in today's environment. And what is it? Does the bank take any ownership of today's environment? And that's my last question. I look for your answer.
I think the best way for me to answer your question, Mr. Chair, is to say something that the Governor and I have both said publicly before, which is we didn't get everything perfect. We didn't make every decision perfectly. We did not have perfect foresight. We were dealing with the same high level of uncertainty that all Canadians were facing at the time. We took the best judgments in the interest of Canadians that we could with the amount of information that we had at the time. We did our job, which is to implement the policy that we judged to be the best to guide the Canadian economy in the long term.